Good morning, everyone. Good morning. Hope you guys are doing well. Today is Friday, January the 30th. Today is the last day of the month. Yesterday, absolutely crazy day in the markets. We'll kind of talk about this here, but pretty big drop after FOMC and, of course, earnings. We kind of talked about the volatility most likely going to pick up after, and we actually ended up having a huge drop towards the downside. We'll kind of touch up on what to look for coming into today. There's more news events. We have core PPI. We have the Fed nomination coming up as well. So a bunch of things to kind of talk about. We had some earnings last night. SNDK up about 20% in the after hours, and it's actually moving very nicely here in the pre-market as well. So keep an eye out on that coming into market open. But yeah, a lot of things to kind of talk about coming into today. Hopefully, you guys are doing well. Good morning. Good morning. Let's go into the charts here in a second. Before we do that, what's up, Andreas? Good morning. B Roots, Cody, I am. What's up, TW, Lamit, KO, Wakey, 50, Frank, Martin, Rocky, Chris, Ryan, Solo, Cinna, Daniel, In, Damien, Gerald, Arnold, Robert, Sweet, Cosmic, B Town, Miss Reggie. Yeah, what's up, everyone? Hope you guys are doing well. How's your guys' trading day yesterday? I know it's quite volatile. Now let's head on to the charts. Actually, before we do that, let's pull up the economic calendar. Okay. So as you can see right here, economic calendar coming into today. As you can see, we do have core PPI. Normally it's not on a Friday, but we do have some more red folder news. So we'll see how this impacts the market. We had a lot of volatility yesterday. We had more volatility in the after hours and the pre-market as well. So we'll see how core PPI affects the market. So we'll go over some charts, wait for that first 30 minutes to play out. It's coming in about 22 minutes here. So we'll just wait for core PPI and then we'll develop our game plan for today. Besides that, that's all what we have. And then, of course, we have some news regarding the Fed as well. So that is something to keep in mind. Now let's go on to some of the charts and what we have coming into today. First things first, let's kind of talk about the QQQ, the overall higher time frames and what we have. Higher time frames, we are still technically bullish. So coming into this week, we end up having that nice push up and towards our all-time highs. Pre-FOMC, pre-earnings, and you can see we actually end up having this rejection off our all-time highs. And then we end up having a pretty big pullback yesterday. Right off the bat, within the first 5 minutes of market open, we end up having a super solid push towards the downside, breaking underneath key levels. So right off the bat, within the first 5 minutes, you can see really solid push towards the downside, indicating that the market was potentially going to stay a little bit more heavy, right underneath that previous day lows. And then once we got underneath that earnings lows, that was key that the market was at least going to be bearish for the day, plus the spine cues. Every single pop was being shorted towards the downside. So for the QQQ coming into today here, as you can see, really solid push yesterday. We're about to open up inside the middle of the range. So for the SPY, for the Qs, we're about to open up inside the middle of the range today after having a really big push towards the downside yesterday. At least right off the bat, number one, we'll see how core PPI affects the market. What we're just going to have marked out is a couple key levels on the chart, and we're just going to see the reaction that we have off these levels. In this case, right off the bat, what I'm going to have marked out here is our 627.50 along with this 625. If you do want to see some continuation towards the upside, it's now going to be above our 627.50 for continuation back up and towards our after hours highs. Another possible scenario here is going to be the bounce off our 625 for this continued pushback towards the highs here as well. So these are the key levels that I have for the QQQ coming into market open. If we want to see some downside, potential pop and fade off that 627, or now it's going to be underneath this 625 for a potential push towards the downside. I wouldn't be surprised if we have an inside bar day today just because we had a huge day yesterday. It makes sense that we'd have right? Inside bar day, right? If we break above our previous day highs or our previous day lows, it's very unlikely for a Friday just because we had a very, very big range, as I mentioned, and we're opening up in between its range today. I do expect a decent amount of volatility, but no real clear direction for today. With us having a big push down yesterday. So these are the key levels that are just going to keep an eye out on. It's going to be that 627.50 along with that 625. As for the NQ chart, I'm going to have to readjust some levels over the weekend, but at least for the NQ coming into today, let's kind of go on to this higher time frame here as well. If you go into this daily chart, you can see a nice push towards the highs. We finally broke outside this consolidation. The Qs hit our all-time highs, and now we're having a little bit of a pullback. Just kind of right back in between the range that we were in. Really for the past month or so, right? We wanted to see that breakout continuation towards the upside. Now we're getting that breakout, and now we're kind of rejecting and coming right back into this consolidation. So we just have to be a little bit more cautious here on the overall markets. The key levels that I have for the NQ today is just going to be this level right here, 25,840. If we maintain above, we can see this continuation back up and towards our after hours highs. If we break underneath this level, then we can see a little bit of a mean reversion down and towards this pre-market low. So this is what I have for the NQ. Let's go on to the SPY chart. So for the SPY and the ES, very similar thesis. If you go on to the hourly time frame, we ended up gravitating up and towards our actual all-time highs level for the ES. Right, was just not able to get above this key pivot high, and now we're just having a little bit of a pullback. Overall, higher time frame still very much intact towards the upside, but currently coming into today, what we're going to have marked out in the key levels that we're going to have marked out is number one, the area that we broke down from. So as you can see, touch here, this is the area that we broke down from yesterday. Nice push towards the downside. We actually came back and retested this level in the after hours, and we end up having a nice reaction off this level once again. So coming into market open here, let me actually just remove all this. Key levels that I have, number one is just now going to be that it's going to be that 6972 along with the area that we broke down yesterday, which is that 6996. So coming into today, if you do want to see some upside, reclaim back above this key level is going to be important for a push back up and towards our after hours highs. If we want to see some downside, or if we just want to see price maintain in between its previous day's range, we like to see a rejection off this level. Very similar thing here to the NQ. We're opening up basically right in between the middle of the range, which is going to be equilibrium. You just want to be a little bit more cautious here on a Friday with it being in the middle of the range, and with the rest of the indices in the middle of the range here as well. If you go into the SPY chart, the key levels that we have marked out, very similar thesis. The area that we broke down yesterday, you can see touch here, another touch in the after hours. And then as you can see coming into market open here now, the key levels that we're going to have marked out is going to be that 691. And we also have that 694. So coming into today, similar thesis, you can see a little bit of a touch here in the pre-market. If we maintain above that 691, we can see a push up and towards that 694. Other possible scenario, longs above our 694 for continuation back up and towards that 696. Shorts are in play here. Potential kind of pop and fade here off this 694, or now it's going to be, of course, underneath that 691 for that continuation back down and towards that 689. So this is what we have for the SPY and Qs coming to market open. You want to have no bias, specifically coming into a Friday with the markets being inside the middle of the range. You just want to pay attention to the reaction that we have off key levels. There are a few names that still have higher time frame setups. We'll kind of talk about that here in a second with SNDK and a few other tickers. But at least for the major indices, you want to come in with no bias and just keep an eye out on the reaction that we have off of these key levels. Okay, let me go on to the QQQ. Sorry, let me go on to the SMH. So as you can see for the SMH, this is the semiconductor ETF. Higher time frames, as you can see, still very much intact. You can see higher lows are being built. We just end up filling its gap that we've created here on SMH, and we're still pushing towards the upside. So As you can see right here, we had a pretty big day towards the downside yesterday, filled a couple gaps, and we ended up having a pretty solid bounce off these key levels. Now, if you go back onto the lower time frames, as for the SMH, the key levels that you're going to have marked out here now is going to be that 409. That 409 is going to be key, plus really your previous day highs, which is your 418. So right now you can see another ticker that's in between its previous day's range. So the SPY and Q is in between its previous day's range, the SMH in between its previous day's range. So right off the bat, it's going to be a little bit more difficult within the first really 15 to 30 minutes because there's going to be no clear direction. So we're far away from its previous day highs and its previous day's lows. We're going to have to use our opening range candles today and really base it more off of intraday price action. So this is something to keep in mind here for the SMH. If we do want to see some upside, what we also can have marked out is going to be that Wednesday's lows from earlier this week. The key levels that we have marked out is going to be that 414. If we break above, we can see continuation towards the upside. If we reject off this level, we're just going to come right back down in towards that 409. So this is what we have coming into today here for the SMH. As for some other tickers, we'll head on to some tech names here in a second. So if you guys do have any tickers, you guys can now drop them in the chat. If you guys are enjoying this so far, I appreciate if you guys drop a like. If you guys haven't joined the free daily watch list, that of course is in the description below here as well. But with the IWM, this one's pulling back just a little bit. The past couple of weeks, the past week here, a little bit of a pullback on the daily chart. Still very much bullish here on the IWM, just coming back into this down close candle. What I would like to see is really maintain above this down close candle if we do want to see a push upside, push back towards the upside. If not, it is going to come back down for this previous all-time highs retest. This is also a very good area for potential low risk pullback as well. So that is something to keep in mind for IWM. Now let's head on to some tech names. Okay, let's talk about some tech names here. Let's start off with Tesla. There's other few names as well. MU had SNDK had earnings, so MU is up based off that. As for Tesla, keep an eye on Tesla coming into today. As for Tesla, as you can see, yesterday we had some earnings. We ended up just basically breaking underneath that earnings low. So this is a very key level earnings low. End up taking this towards the downside underneath that earnings low, break and retest underneath that 425. And see multiple touches off this general area. And then we actually had some news in the after hours, and now we're just basically back right at this earnings low. So as you can see here for Tesla, key levels that I have marked out is this 425, which is actually very key, right? This is kind of the range that we have established here on Tesla. You can see multiple touches around this general area. Once we broke underneath, we end up having this nice continuation lower. Now for Tesla coming into today, keep an eye out on your earnings low still. I'm not as interested in trading Tesla, right? Kind of in between its previous day's range here. If we do want to see some upside, we need to see buyers step in here off this 425. If we break underneath that 425, we can see this push back down in towards that previous day lows. So this is going to be the key level for, this is going to be the key level for Tesla coming into today. As for NVIDIA, the key levels that we have coming into today, as you can see, a nice kind of drop towards the downside yesterday on NVIDIA, but this was the one that had a super nice bounce all the way back up and towards almost its high of day plus the high that we created here from Wednesday. So if we're looking at this on NVIDIA, I still like this one on the higher time frames. It hasn't set up just quite as of yet, but as you can see, touch here, we have multiple touches on NVIDIA. Until we can break above this 193, we're going to be a little bit more hands off. But once we can break back above this 193 key area and close above this 193, that's going to be our key sign for continuation higher. You can see higher lows are being built. Right now, we just like to see, as I mentioned, the break above this 193 for continuation. So this is what we have for NVIDIA coming into market open. Now, at least for today, I don't expect it to break on a Friday, but we'll still keep an eye out on NVIDIA. Longs, you can be looking for a potential bounce off this 190, or now, right, it's going to be the break above this 192.50 for this continuation back towards the highs here as well. So this is what we have for Tesla coming into market. Sorry, this is what we have for Nvidia coming to market open. We'll keep an eye out on this ticker coming into today and next week as well for upside. As for AMD, so AMD, as you can see right here, AMD ended up rejecting off our key levels yesterday, which was at 256, broke underneath below the range, and we ended up having a little bit of a push towards the downside. So for NVIDIA, now what we like to see is a reaction that we have off of our 250 key psych level. So for AMD, if we do want to see a push higher, we need to reclaim back above this 251. That's going to be the only level for upside. If you do want to see a move lower on AMD, potential pop and fade for this continuation right back down in towards our pre-market lows, which in this case is going to be that 244. As for a few other tickers, for NVIDIA, what candle you're waiting to close above that 193? It's going to be on the higher time frame. So if you have a 5-minute close, right, you can easily get faked out just by looking at the previous charts. So personally, right, you like to see either a 5 or 15-minute, but you just have to be cautious because you can get faked out. Of course, if you look at this on the hourly chart is going to be the best close on the higher time frames to confirm this move right back towards the upside. If we go on to the next chart, which is Apple, so this had some earnings. Where do I mark out these key levels? The key levels are marked out. I do have a video. It used to be on my second channel, but I actually made it unlisted. But it is on my second channel. If you go on to if you join the free community, or if you join the free watch list, I'll post the how to draw key levels video once again, or I'll just post a link to it. As for Apple, the key levels that we have marked out is just this 262, along with this 255. So as you can see, this is just the range that we have established here for Apple. We had earnings yesterday, and now we're still back basically right in between the middle of the range. So for Apple coming into today, what we like to see here is the reaction that we have off this 262, along with the reaction that we have off your 255. If you do want to see some continuation towards the upside, right, either that reclaim back above this 258 for a push higher, or of course now it's going to be above that 262. As for some downside, you can mark out this level here as well, potential pop and fade off this 259, which is just essentially equilibrium, or right now it's really going to be underneath that 255. So other levels, let me actually just mark out this, is going to be that 259 here on Apple. Let's go on to a few other tickers. Jack, if the higher time frame is in an uptrend and we have a gap up and price breaks below the opening range, should we trade it to the downside on the gap fill or not? Because we have a higher time frames, you can trade both, right? Just understand if you're gonna trade the gap fill towards the downside, right, you're kind of trading against the trend, and it's just primarily going to be a scalp trade. If it doesn't work right away, then you can cut it. If it works, awesome. But you're just trading against a trend, right? I've traded gap fills. It works great if you're trading the major indices. If you're trading something with a very, very strong higher time frame trend, then I would avoid it. Something like SNDK, right? If you've been trying to short SNDK on all these gap ups, right, you're going to lose money because this is a very, very clear uptrend. If you're trading something like the QQQ and there's a gap up, right, this is in a minor, it's not in the greatest uptrend, but you can see it's still building up higher lows. So it's a lot easier to short compared to something that's overextending quite a bit, something like SNDK, or maybe even something like gold. It's been very hard to short, right? Yesterday was the first nice day you can short with this huge gap up if you look at GLD, but every single time if there's a huge gap up, right, it's going to be very hard to short. This is like a parabolic short. There's specific criteria for that if you're looking for that. Okay, now let's go back onto Google. So for Google, the key levels that we have coming into today, you can see it recently made a brand new all-time highs and then immediate rejection right off the bat, right off our key levels, pushed towards the downside within the first 15 minutes. So as for Google coming to today, the key levels that we're going to have is our 336. If you do want to see some upside here, break above that 336 for continuation, rejection, we're going to see that push right back towards the downside. As you can see, a lot of this is just in between its previous day's range. So I'm going to be very cautious coming into today with it being a Friday, with the overall indices being inside of its previous day's range. The one that I'm going to focus on today, we'll kind of talk about this in a second, is going to be SNDK with bullish earnings. We can be looking for a IV flush on that one for a potential dip and rip towards the upside. As for Microsoft, this one, key levels that we have marked out, you can see we had some earnings on this one, drop towards the downside underneath key levels here on Microsoft, but now we're actually at this higher time frame gap. So you can see we have a couple gaps on the chart. We have this gap. This was from earnings back from May of last year. You have this gap down here as well. So you can see buyers are stepping in right off this gap fill. So what we like to see now on Microsoft is the reaction that we have off of your 440. All right, 440 here is going to be key. If we can break back above our 440, we can see this continuation back towards the upside. If we reject off this 440, we're just going to see a push right back down in towards our previous day's lows. So that's going to be the key level for Microsoft coming into today. Keep an eye out on 440. As for Meta, nice pop towards the upside. We ended up just coming back up and towards our pre-market highs in this full daily gap fill. So no opening drive play yesterday. No earnings play on Meta yesterday, just because we already hit our key level as soon as market opened, which was our after hours highs. It kind of just came right back down in towards our pre-market lows and just consolidated. So for Meta, the key levels you're still going to have marked out is going to be that 742.50 along with our 715, and then we can mark out equilibrium here as well. So for Meta, keep an eye out on the break above your 430 for continuation higher. Right, potential bounce play here off your 415 for a push towards the upside, or of course above our 742.50 for this push towards the upside here as well. As for a few other tickers here, Amazon, this one is just kind of consolidating, not really doing too much after a push down earlier into the week. The key levels that we have marked out now is your 240 along with your 236. If you do want to see some upside, reclaim back above your 240 is key. Rejection, we're just going to come right back down in towards that 236. And then, of course, for some other tickers, Netflix slowly pushing back towards the downside here as well. This had earnings a couple weeks ago. If we do break underneath this 83 key psych level, we can see a push down in towards that 81 here on Netflix. So keep that in mind. Of course, if buyers do want to step in and defend this level, we're going to see a push right back up in towards our 84. Okay. That was a decent amount. Let's go over a couple other names. We actually do have core PPI in about 2 minutes here, so that's really what we're going to be waiting for. So I'll answer probably some questions. You guys can drop some charts. You guys can drop some charts or any tickers you'd like me to go over now in the chat. I'll go over MU, SNDK here after core PPI. If you guys also are enjoying this so far, I appreciate if you guys drop a like. If you guys haven't joined the free daily watch list, that of course is in the description below as well. Man, those SNDK spreads are going to be, the SNDK spreads are actually going to be tighter now. They should be tighter just because there's going to be a lot of volume coming in after earnings. So SNDK, a little bit of a lower volume ticker, but now with earnings, it's going to have tons and tons of volume. So the spread, it is going to be very, very expensive, just because now we're closer to $700 on the underlying. But there's going to be a lot more volume on the contracts, which is a good thing. One thing you do have to keep in mind is right off the bat, there's going to be high IV. So we're going to be waiting for an IV flush if we're going to take any sort of trade on that one. I'll talk about that here in a second. Let's see. We have about 26 seconds here. How do you configure your charts with different colors in the pre-market and close? It just comes in. That's just the default setting. If you trade any stocks or indices, you're going to have that. If you trade Forex, futures, you're not going to have your pre-market and after hours. You're going to have different market sessions. Palantir, yeah, looks incredibly weak. I agree. What's your take on MU taking to $20 post market? They didn't have earnings this week. Yeah, they didn't have earnings, but it's a beneficiary based off of SNDK. We'll talk about that here in a second. Okay, let's wait for core PPI numbers. It is 8:30 here now as well. Okay, so we had some core PPI numbers come into the market. Let's actually go back and take a look at these numbers. As you can see, core PPI is actually coming in very nice. So forecasted 0.2, actual 0.7. That is the core PPI month over month. And then PPI month over month 0.5 compared to the forecasted, which was 0.2. So the overall market, we're having a little bit of reaction here so far. Since we had such a big day yesterday, we're going to have a little bit more volatility, but right now, as you can see, we're still right in between its middle of the range. So coming into today, the game plan is really still intact. We're just going to keep an eye out on the Qs. Sorry, we're going to keep an eye out on the QQQ 627 along with this 625. So that's going to be the game plan for today. Nothing has changed here on the SPY and Qs either. Since we are in between its previous day's range, we're just going to be a little bit more cautious within the first kind of 15 to 30 minutes of market open. I'll touch up on this in a little bit. Now let's just go on to some of my main watches that I'm looking for coming into today. We'll start off here on SNDK. So number one, SNDK did have earnings. And now you can see we're gapping up once again. So we're up about 22% here in the after hours. We're gapping up. Now we're about 660 here on the underlying chart. So really big gap up after having a super solid push towards the upside. Day number one after this huge gap up. We have to be a little bit more cautious. If we are looking for SNDK, now we're going to have to mark out our levels based off of our pre-market action. So for SNDK, we can mark out essentially this high that we've created. This was our first initial pop. And now for SNDK here, we have to mark out our pre-market highs. And we can also mark out, I'm going to mark out this level right here, which is essentially that pre-market lows, 644. So coming into today here for SNDK with this gap up above key levels, what we're going to mark out today is that 644. If I am looking to trade SNDK today, which is one of my top watches, I want to see a dip and rip, right? I want to see that IV flush. So let's say, for example, we're trading the 700 contracts or the 680 contracts expiring today, right? What we like to see is an IV flush right off the bat. And then we like to see that first dip be bought up for this continuation back towards the upside. This is key, right? The IV flush is going to be key if you're going to look to take this trade. If it moves higher, right, you don't want to chase price because the IV is still going to be elevated. You need to see a pullback within the first really 5 minutes if you're going to take this trade back towards the highs. So I'm going to keep an eye out on SNDK off of our pre-market lows or any sort of pullback for that continued push towards the upside. That's going to be really the only scenario that we have coming into today here on SNDK. Keep an eye out on that 650 and that 644. As for a few other tickers here, let's go on to MU. So as for MU, the key levels that we're going to have marked out coming into today, what we can have marked out now is just going to be that, let me actually mark this out. It's going to be that after hours highs that we've created on Wednesday, and then we could drag this over here as well. So for MU coming into market open, there's actually a couple key levels here on MU. I'm going to mark out this, which is our 440 along with our after hours highs here on Wednesday. It's not the cleanest chart this week just because we have a lot of after hours and pre-market action. But for MU coming into market open here, the key levels that we're going to have marked out is going to be that 452.50. If you do want to see some upside, break above our 452.50 for continuation. Potential pullback longs are in play here off of our previous day highs as well, off that 440. So this is the key levels that we have coming into today here on MU. Of course, you could be looking for potential kind of mean reversion short if we break underneath this 452.50 back down in towards that 450. So this is what we have today here on MU. Other names, we have some SoFi earnings in the after hours, just kind of bouncing off key levels of support, and really not too much to talk about here on SoFi. Hood showing a little bit more weakness, actually coming down into a key level of support here. Similar thing with kind of Palantir, we're breaking underneath key levels. But for Hood, as you can see, the key levels that we have marked out is that 102. Now we're underneath that 102. That's going to be the key level moving forward. Rejection off that 102. We can see a push down in towards that previous day lows. Reclaim back above, we can see a push right back up and towards that 104. So that's going to be the key levels for Hood. As for Palantir, you can see this one's just continuing to show weakness. The key levels that we have marked out yesterday was our previous day lows. And the next level here on the higher time frames was that 147. So really solid push towards the downside here on Palantir. The other levels that I have marked out, as I mentioned, was that previous day lows. And once we got underneath that previous day lows, we end up having that nice push really within the first 15 minutes, super solid push towards the downside. So for Palantir moving forward, the key levels that we're going to have marked out now is going to be your new previous day lows. In this case, it's our 147. 147.60s. If we want to see some downside today, we're going to like to see the break underneath that 147.60s for continuation lower. Another possible scenario, kind of this pre-market high retest or your previous day close retest for continuation lower here as well. So that's what we have for Palantir. This one still maintaining weakness towards the downside. Now let's go on to some other tickers. Let's go on to let's actually go into AVGO. This one kind of consolidating a bit here. Not really too much to talk about. Let's go on to just gold and silver since these ones are fairly volatile. So if we go into gold and we go into silver, this was the first sign of weakness yesterday, which was that major drop right off the bat. So for both gold and silver, this is when now the tape has flipped, right? Once we broke underneath key levels, you can see now the tape is starting to turn a little bit bearish. You can see a big drop yesterday, and now that first pop is being shorted towards the downside. Now, if you're looking at this on the daily chart here as well, right now we're breaking underneath key levels in this case, which was just that key level support, right? That was your first market structure break as well. So for gold, moving forward, the key levels that you're going to have marked out, number one, let's actually just mark out these key levels, is just going to be the low that we created after this big initial drop. So this right here, which is the drop yesterday, key level support, you can see a little bit of buyers stepped in. Once we broke underneath it, now we're essentially using this as a retest towards the downside. And we're currently actually rejecting off this level here in the pre-market. So moving forward here on gold, right, potential pop and fade towards the downside is in play down in towards that 49.60. If you want to see any sort of bounce, you'd like to see that reclaim back above for this continuation higher. For silver, key levels that we have marked out is going to be this key level of support. Once we broke underneath it, you can see nice kind of break and retest. This was the key level from yesterday, right? Key level support, couple bounces. Once we broke underneath, retest, continuation lower. So we end up having that retest. It was during the overnight session, a nice retest towards the downside here on silver. Now the key levels moving forward, if we go back onto the daily chart, is going to be all the way back down in towards this down close candle, which is this daily order block here. So for for silver, this is what we can have marked out, at least moving forward. If you do want to see some extra downside now on silver, there's a couple scenarios. We can actually mark out this level here as well. If you do want to see some downside, we need to maintain underneath this 102 for a continued push lower, right? Lower highs are going to be built. If you do want to see this push down in towards this 95, if we reclaim back above, we can see a little bit more consolidation and potentially a move back up in towards that 107. So this is what we have for gold and silver coming into today. As for the other game plan for the SPY and Qs, let me just go over here now. Yeah, nothing's changed. So with it being a Friday, right, be very cautious, at least right off the bat, just because we are going to have a decent amount of volatility today, but I don't expect a clear direction, as I mentioned, with us being inside the middle of the range. That is applied for both the SPY and the QQQ. The main watch that I'm going to keep an eye out on coming into today, my favorite one, is, of course, going to be SNDK. So I'm going to be looking for the first right? Pullback or a dip and rip, essentially we need that IV to cool off. So we need that IV flush if we're going to look to take this towards the upside. But this is going to be my main watch coming into market open. As for the rest of the tickers, I'm somewhat interested in MU here as well, just for sympathy for continuation higher. And besides that, the rest of the tickers, I'm a little bit more neutral on. NVIDIA is still bullish on the higher time frames. And then the rest of the names, yeah, fairly neutral just with the overall market direction and currently with it being inside of the range. Meta is something we can actually keep an eye out for as well. Day 2 earnings continuation. So day number 1, nice pop towards the upside, a little bit of consolidation. Meta, we can be looking for day 2 continuation for a push up and towards our 742 and potentially above here. So keep an eye on this 730. If we can break above here, potentially you can see a move up and towards your 742 and above. So Meta actually, just because we had some nice earnings yesterday, we can keep an eye out for day 2 continuation here on Meta. So Meta, SNDK, MU are my favorite watches. We'll still keep an eye out on NVIDIA. I'm not sure if it's going to set up today. It still is holding up, so we'll keep an eye out on this next week. And then besides that, yeah, the rest of the tickers, just kind of in between the middle of the range here with the SPY Q. So we'll see what the SPY Qs does within the first 15 to 30 minutes of market open. It's a Friday today, so be a little bit more cautious. So you're bullish on Meta. Yeah, for day 2 continuation, we'll see if it's setups, but higher time frame, I'm bullish. We had earnings yesterday. If we do want to continue higher, or if Meta wants to break above key levels, I like Meta for upside. I like SNDK for a potential IV flush as well. What makes sense to short as would it make sense to short SNDK to benefit from the IV flush? No, not right off the bat. That's not how IV works. If you're looking for a potential short on SNDK, be a little bit more cautious. But the SNDK short is going to unravel. Not today. I don't think it'll short. I don't think we'll have a day 1 earnings reversal after having a big push up on up about 22%. It is most likely going to head higher before it heads lower. So we'll kind of talk about this a little bit more next week. But with this gap up, with earnings, right, shorts are definitely underwater on this one, up about 20%. So we're going to be looking for that first dip, as I mentioned, to go long back up and towards our 670 and above, right? The trade today is going to be that pre-market low IV flush for a push up and towards 680 and potentially 700. So that's what we have for SNDK. Why would you, if the market's falling, why would you? I'm only looking for longs on things that have news, right? News like Meta and SNDK, right? This matters a lot more than the overall market. You can see they're holding up while the market's dropping. So these are the ones that we're going to be focusing on. I'm not focused on longs on, let's say, AMD or the overall market in itself, or really NVIDIA. I'm focused on longs that have news, which is earnings, and that are holding up based off the higher time frames, right? Anything else in the market, as I mentioned, I'm more neutral, and I'm just going to be a little bit more cautious, open and playing both sides. But if we're going to long anything, right, keep an eye out on a Meta potential 2-day, day 2 earnings play, and SNDK day 1 earnings play for continuation higher. But yeah, that is going to be it for me today. I'm going to get ready for market open here now. Hopefully you guys did enjoy that. If you did, appreciate it. If you guys drop a like and sub. If you guys haven't joined the daily watch list, that of course is going to be in the description below. I have a YouTube video coming out this weekend, which is going to be on top-down analysis, really solid video as well. That's going to be on Sunday at 12 p.m. Eastern Standard Time. Besides that, hopefully you guys have a great rest of the day, great week. It's been an absolute fantastic month to end off January. So hopefully we can close the month off strong. And then I'll see you guys next week for a brand new month. All right. Take care, everyone. Have a great rest of the day. Peace.